Well, now we turn to Matt Arnold. He's a senior consumer analyst at Edward Jones and a Bloomberg Best on Tiffany. He's got the most accurate recommendations on the stock by our reckoning. And he joins us now live from St. Louis, Missouri. Matt, so good to have you on. Let me get your thoughts on the conference call this morning. You know, Julie was telling us they didn't really mention too much about Japan, at least for the full year. But what was your take?
It was a very strong quarter. We knew that going in that it was going to be a strong quarter given the holiday update they provided. The key is outlook, and they provided a very good outlook despite what's clearly going to be some challenge with Japan. So, you know, they raised, they provided an outlook that's above expectations. Even if you assume that 5 cent a quarter hit from Japan persists, the company should be able to deliver a very good year here.
You know, the interesting thing is, and many economists say that as they talk about Japan as a whole, the whole economy, that it's very hard, it's too early to really predict at this point. Do you not think that's the case for Tiffanys as well? I mean, to talk about how this is going to affect them over the full year, should it be 5 cents a quarter? Should it be 10 cents a quarter? Is it too early to be making those assessments? And do you think investors are acting a little bullish or overly bullish on the stock at the moment?
It is definitely too early to predict exactly what the hit will be, but there's a couple things to keep in mind here. First of all, this is a temporary issue, and as such, it's something that you shouldn't value the company on as a permanent issue. And, you know, it's clearly going to be a bigger issue for the next couple quarters, and over time, it should taper from there. So beyond that, I mean, you have to keep in mind this is a geographically diverse company that can generate very good results in many other regions to offset it. It's done it before. We've seen Tiffany offset some weakness in Japan before, and we think they can do it again.
Let's talk a little bit about Japan once again, and Tiffany's 20% of their sales, yet they also see a lot of sales growth outside or in the general Asia-Pacific region. What other countries are important for them?
Well, China is almost 10% of Tiffany's sales at this point. Korea is also meaningful. So even outside of Japan, there is plenty of meaningful and nicely growing exposure to Asia.
Hey, Matt, you've had a buy on this stock for quite a while. When I just looked back, I hadn't seen a change from a buy in quite a long time. What would threaten this as a good holding for you?
One of the main things is global recession. Clearly, this is a very discretionary item, luxury jewelry, and the threat of a recession around the globe would be the biggest threat to this stock in general. The reason we've had a buy for so long is because there's a very good reason to be a long-term owner of this company. It has a stellar brand, and that brand is translated well around the world, and given the growth opportunities that exist outside the United States in terms of consumer spending, we think it makes a lot of sense to pursue ideas like this one.
Matt, the stock is up, you know, $3 today at 60.42. Given what was said on the conference call this morning, are you thinking about revisiting your price target?
We don't actually publish price targets. What I will say about recent price action, I mean, the stock's pretty much just erasing the downdraft that we saw, you know, on concerns about Japan, and it rightfully should. I mean, they just erased a lot of the worries there, and at the end of the day, they are going to deliver a very good year with double-digit revenues, mid-teens earnings growth, even though, you know, 19% of their business is currently being pressured by an unfortunate event. So that's impressive and consistent, and that's, you know, one of the reasons why we like this story.
Matt, quickly, let's talk a little bit about where they're actually getting the most growth, not just regionally, but in terms of their product lines. I mean, these yellow diamonds, I don't have one, but I guess apparently they're quite popular right now.
Yeah, they're popular. Tiffany also has an innovative line called Keys that's been doing well. And clearly, you know, their core business is more traditional jewelry, but, you know, they're pursuing growth in handbags and other accessories like sunglasses. Eventually, watches could be a meaningful piece of the business, even though it's not now. So even though this has been a brand that's been on fire, there's still plenty of other areas where Tiffany can take that brand and potentially do well.
And then just very, very quickly, Matt, you do cover a number of other retailers, not necessarily luxury retailers, but where Japan is concerned based on Tiffany's call this morning. Are you taking a closer look at some of those companies? Do you feel a little bit more optimistic now?
Not necessarily. Most of the companies we cover don't have the luxury bent that Tiffany does, and luxury is doing extremely well. If you think about it, the luxury consumer and higher income demographic in general.
Sorry, we got to go to break now. I apologize. Thanks so much for joining us, though.